Hello and welcome to Moneyline. This is Matt McCall. Thanks for joining me here on a Friday as we wrap up the week. It is November 6th. And we got a lot to talk about. It's going to be a nice, quick, to-the-point show. We're going to talk about the market, what's going on. The rally kind of continues stalling out a little bit. We have huge earnings we want to talk about. Some big stocks moving in some sectors that we're watching. Some of our stocks are moving. We're going to talk about the jobs number. And, of course, take some of your questions as well. Talk cannabis stocks. They're also on the move. Bitcoin, you name it. Things are moving. You need to tune in now. Coming up on Moneyline.
The buck starts here. Moneyline with Matt McCall.
All right, folks, again, this is Matt McCall. It is November 6th. It is Friday. And my goodness, so what's Thanksgiving? 2 weeks away? 3 weeks away? A little less than 3 weeks. 3 weeks from yesterday. Time's flying. So we had the election, which we still don't know who the next president is going to be. The odds are that it's going to be Biden. And if you're Trump followers or supporters, don't shoot the messenger. I'm just telling you what the numbers are showing or what everybody's saying. I don't know. I'm just saying that's what it looks like as of right now. And that's why the cannabis stocks are on a run. We'll talk about that in a little bit. But for the most part, the market's kind of ignoring it because they see a split government and they think that's okay. No real power to one party, and it's not really proven to be the best setup. Democrat president, split House, happened for about 4 years in recent history, and I think the market averaged about 16% gain per year. I'll take that. If that's the truth, then our hypergrowth trend should be doing way more than that. That'd be fantastic. So that's not the worst thing in the world, but we'll have to wait and see what eventually comes of the final results. I'm sure it's going to get ugly at some point. So let's just kind of wait and see what goes on there. In the meantime, we're going to keep investing in our hypergrowth trends because, as I mentioned, when it comes to investing, I don't care. These trends will continue. And I've said that many times, and I'm going to keep saying it. There's going to be more electric vehicles on the road by the end of the roaring 2020s than there are now. Artificial intelligence is going to continue to be everywhere. Internet of Things is going to continue to spread. Smart cities all over the place. Just go on and on. Healthcare, you name it. Things will continue to get bigger and better. 5G is not stopping regardless of who wins the presidency. It's not. That one person isn't that big to stop 5G. Just keep that in mind. And the other thing to keep in mind is I think people's stress levels are through the freaking roof right now. I don't feel stressed at all, but apparently it is because my sleep pattern's been really whacked out. But I will say just try to just breathe and there's nothing you can do. If you voted, you voted. You can't change it. You can't change the vote. So let's not get so worked up. But all that being said, we had the markets down this morning. And right now I'm taping the show. It's around 11:25 East Coast time. We got the markets down about 0.2% or so. Dow's down 70 points. S&P's down 6. Nasdaq's a little more, 0.4. Russell 2000 is unchanged, so small caps are outperforming. So we're not seeing much. We're well off the lows of the early morning session here, about 2 hours or so into the trading day before we head into the weekend. All right, so the big number this morning was the housing number. We'll get into that before we get into earnings. So there's certain stocks I really want to touch on because it's very important. But if we take a look here at the housing number, sorry, not the housing, the payroll numbers, non-farm payrolls increased by 638% in October, and the unemployment rate fell to 6.9%. The economists that were surveyed by Dow Jones thought we'd have an increase of 530, so over 100,000 more jobs created, which is great. They thought the unemployment rate would be 7.7%, came in at 6.9. That is great. But, of course, its headlines buried on CNBC.com. I don't care what side you're on, left or right. This isn't about political side. It's about telling the gosh darn truth. These numbers are good. They're much better than expected. If you take away the numbers from the government, which were negative because they had the census workers, there's a loss of 147,000 jobs from the census workers. Overall, government jobs declined 268,000%. That means, in all, private job creation for October was 906,000 jobs. It was actually better than September. And everybody says things are getting worse, things are getting worse. Mark Zandi, who I don't even know I think he's still with Moody's, the economist, could be one of the worst economists ever to walk this earth. This joker has been so wrong. I saw his name this morning when I was reading about going back into a double dip recession, could be worse, all this BS. These guys are so negative. a lot of that's political driven. He worked with the Obama administration, so he'll start saying good things if Biden wins. And that's how a lot of these economists are. They push their agenda. But I don't care. I hate economists, both sides, in the middle, the left, the right. I don't care what party they're affiliated with. It is the most BS job in the world. They tell you what happened after it happened. I don't care what he thinks. Nobody should care what he thinks. It doesn't matter. They're looking in the past. And when they predict the future, I've already done this study. I could pull it back out and bring it out next week. The study, and this goes back decades, around the world, looking at economists, how bad they are. I mean, you couldn't be this bad if you wanted to. If you tried to be wrong, you couldn't be this bad. And I'm not even joking. So please, when you see The Economist and see this crap, ignore it. My God, it just gets me irritated. I'm sorry for getting irritated. Maybe I am stressed out, but my goodness. The fact that we put these people in the headlines, we listen to it, and we potentially make decisions based off it. Holy shit. It's nuts. It probably seems like I'm in a bad mood, but I'm really not. I'm actually in a great mood right now. It's sunny outside. It's beautiful blue skies. It's not freezing cold on my scooter this morning. I have a little Dunkin' Donuts left. Can't complain. But the jobs numbers look pretty damn good. So let's keep that in mind, all right? Earnings are looking really good. And three companies I really want to talk about. And I tweeted out a bunch of them last night that I just thought were fascinating. Don't have exposure to all of them, but just I thought were important. One is Zillow, and we do have some exposure to Zillow. It's obviously, everybody knows Zillow, right? The online app to find homes should hopefully soon put realtors out of business because realtors are not needed anymore in this day and age in 2020. Crushed estimates. Even though revenues fell by 12% due to the pandemic, obviously well above guidance, well above company guidance as well. The traffic to the mobile app, which I'm a huge part of this because I look at it every day, up 21%. And I thought it was pretty fascinating. The CEO referred to what's going on, and I'm going to reuse this, and I'll give him credit for it. It's called the Great Reshuffling. People are looking at out of cities to the burbs, vice versa, looking for beach houses. I'm doing all the above. So to me, there is part of the great reshuffling going on, and that has led to a boom in people looking for homes on Zillow. So man, oh man, company crushed numbers. The stock right now is up about 14% to a new all-time high. And let's just take a look at what's going on here with Zillow and how it's performed so far this year. And it's pretty fascinating because you think to yourself, well, if things are as bad as everybody says they are, not everybody, but a lot of people say they are, how the hell is Zillow up 158% to a new all-time high? If things are so bad, people aren't looking to buy homes or move. You're not up 158%. I mean, this is just, these are the times where you can argue with me that what the headline is true or not. Views, yes, we're all entitled to our opinion. But when you look at stuff like this, where you look at Zillow and the stock's up 158% this year, that takes away all the headlines. That shows you how strong the housing market is. So if somebody tells you the housing market's not strong, they're lying to you. They're flat out lying to you. And, maybe it's just Zillow because, that's they're a little more cutting edge technology. Sure, I'll give you that argument. But look at some of these home builders. The home builder ETF, ITB, home construction ETF. This is a basket of home building stocks, home improvement companies, you name it, up 28% year to date. So it's not just Zillow. I mean, you got to look at this, what's going on. So to me, you want to keep an eye on that, this sector. And I have exposure to this sector through Penn Financial Group for my clients. We have some exposure. We have some exposure through the newsletters as well, investorplace.com/moneywire. So we have a lot of exposure. And I have a little, I have my notes thing here. Every time I have thoughts, I put them down. And a couple other names out there, and I might actually share one with you. We don't have any exposure to it. It's getting hit today, I think. It's down a little today, but it's called EXP World Holdings. EXP World Holdings. The symbol's EXPI. You've probably never heard of it. Symbol again, EXPI. Even sounds weird saying it. EXP World Holdings. It's not a very big company. It's about $3.3 billion. but they do cloud-based real estate brokerage services for residential home buyers and sellers here in the United States, and a little bit of international exposure as well. But if you look at the numbers, what I like about this company is, if you look at revenue in 2018, did about $500 million. Looking at 2022, so it's a matter of 4 years, 2 years from now, nearly $2.2 billion looking at doing revenue. Turning profitable this year, looking up to make upwards of 70 cents a share in 2 years from now. That's a pretty nice move. The stock has moved a lot. This is a company you talk about having a hell of a year. This stock, EXPI, is up 308% year to date, but it is well off the highs. It's pulled back as of late. A lot of support at $40. It's at 46 right now. So there you go. It's got a free idea right from me right there. Another one doing well today is IAC Interactive, symbol IAC. Another stock breaking out to a new all-time high. Another stock having a hell of a year. And this company has different ownerships and different online media, let's call it, companies. Angie Home Services, you can book people to come do stuff in your home, is his biggest revenue source. Vimeo, which is kind of like YouTube videos. Dotdash is a place you can go and get all kinds of answers, different things. Has a bunch of other apps. And the company came out, reported really good numbers last night, and announced they actually might spin off Vimeo. Vimeo is now, I think, within their, the last raise is probably around $3 billion market cap, but they might spin off Vimeo. If you remember, IAC has spun off other companies in the past. The most recent one that it's spun off is Match.com, MTCH. Since the spinoff, back in 2015, its spinoff was down around $15 a share. Now that stock is at $133.50 a share. So about 9x up since that 2015. So, man, that was a nice spinoff. And Vimeo, if it spins off, that's one you want to keep an eye on. Of course, if you're shareholders of AIC, you're likely going to get shares in Vimeo. So, again, that's a lot of online stuff, a lot of things that were accelerated due to the pandemic. So as much as this pandemic sucks, man, we got to look for stuff that's doing well. And here's another one. Another company that's rocking and rolling today. It was actually up yesterday, but I'm going to talk about it today. It's down 2% today, but yesterday, the stock, I think, was up 41, 42%, over 40% yesterday to a new all-time high, and that's UPWORK, UPWK. So UPWORK, if you've never heard of it, it's basically like that little gig website, if you will. I like to call it gig website. It's an online marketplace. So if you need somebody to do gig work for you, it matches you up and they can do it. Build a website, whatever it might be. There's gig work out there. Revenue's up 24% and they beat. Earnings per share came in at a positive 4 cents per share, 7 cents better than what we were looking for. Gross services volume, which is GSV, which is good for a good way to look at analytics of this type of company, up 23% year over year. They raised guidance as well. It's about a $3.5 billion company after the big run that we had yesterday. And again, you look at some of the numbers. Last year, it had revenue of about $300 million. By 2024, it should be more than double from there. Should profitable, right around profitable a couple of years from now. But that's very interesting company to keep an eye on. One of their competitors is FIVERR. You've probably heard of this one. This one, I think, it gets a little more play in the press. Symbols FVRR, Frank Victor Romeo Romeo. It's about a $6.2 billion company. But again, you're seeing huge growth on top line and bottom line with this one as well. However, even though it's going to be a little more profitable on bottom line, the revenue is not as high, where UPWORK has actually a little bit better revenue. So I want to keep an eye on both those. And FIVERR is at a new all-time high today. It took a big hit at the second half of October, but it's now come back, now up again today, 5% to a new all-time high. But again, let's just look at what these stocks have done year to date. FIVERR, for example, is up, you're not even going to believe this, 685% year to date. 685% year to date. I mean, that's a make a portfolio type return. UPWORK up 165% year to date. Can't make this stuff up, folks. I mean, there's big stuff moving out there. So I wanted you to take a look at those. I also want to talk real quick about cannabis stocks. The cannabis ETF, MJ, which is basically Canadian stocks, it's up about 11% right now. It's up over 15% at one point earlier today. But from the low in September to from low in September to the high earlier today, it's up about 45%, 50% nearly. And I've been saying I like the U.S.-based cannabis stocks. They're up today again, most of those. But again, they're not up nearly as much as some of these beaten down Canadian ones. Canopy Growth, the largest cannabis company in the world, is up 10.5%. Aurora Cannabis is up 60% this morning. I mean, up over 100% this week. I mean, some of these stocks are rocking and rolling. And of course, why? Because everybody's pointing to Biden potentially winning. If he does, you'll likely see the cannabis be removed from some of the lists out there and decriminalized. And we potentially could see it legalized at a federal level, which I think we will see in the next few years, and that will lead to a big boom. It'll be very similar to the alcohol business. So you'll see the federal government do, and I think if the U.S. does it, you're going to see it all around the world because a lot of countries are looking for revenue right now. And how do you get that? You tax the hell out of people. You tax the hell out of cannabis, and that's what I see happening. Same reason we're going to see sports gambling be legalized all around too, and we've seen how those stocks have done. I talked about some of them yesterday: DraftKings, Penn National, Caesars, all on the move based on you've seen three states on the ballot passed that. Five states had different ballot initiatives about cannabis, all got passed. So you see where the country's going. Basically, let me do what the hell I want to do. More libertarian type view. So you're seeing these stocks move on that. Then we want to talk about Bitcoin. Bitcoin last night, in the middle of the night, as I was sleeping, yes, I was able to sleep, which was fantastic, came very close to $16,000. $16,000. Remember, just around 10,000 not too long ago. People were telling me I'm crazy. Bitcoin's not going anywhere. I mean, not too long. I'm talking like not long ago at all. Right now, it's around 15,600. It's up big in the last week. I mean, you look at what's going on here. I mean, these Bitcoin altcoins are really rocking and rolling. In the last week, Bitcoin's up 15.5%. In the last month, it's up 44%. Like I said, it was just around 10,000 not too long ago, up 44%. What I love is you look year to date, it's up about 120% year to date. You look at gold, up about 22% year to date. S&P's up single digits year to date. I mean, this is you have to have some of your portfolio in this. This is the new gold. It's taking place of potential currencies down the road. You want to diversify in altcoins and Bitcoin, folks. I mean, people are going to say it's too volatile, it's too risky. That's their opinion. I don't believe so. Is there volatility? Is there risk involved? Absolutely, but there is with stocks too. So to me, I think it's a great way to diversify a portfolio. It's like anything else. You eventually want to have this great diversified portfolio. You look at the endowment funds of these large institutions, like the Harvard, the Princeton, the Yale. Yale, what's the guy's name? Used to run it. He might still run it. Jensen, I think. I read one of his books about 10 years ago. And, back in the day, they've been getting into private investing. They've been getting into alternative investments. And that's how these endowment funds are worth billions of dollars and keep growing because they're able to invest in things outside of the traditional stock market. So we have now the ability to invest in altcoins and Bitcoin very easily. So that's fantastic. Another thing we have exposure to as well, which a few years ago when the laws changed, is now you don't have to be an accredited investor. You don't have to be a wealthy person anymore to invest in private companies. And I am launching next Tuesday for the first time ever a brand new product that's going to help you determine which private companies to invest in. We're launching a model portfolio with 3 companies that are now available to buy, and they're out there right now. So when you get that, you sign up as a new member, you will get exposure to that, and you will get access to those 3 companies right away. You can go out and buy them, which I can't wait to do because, as many of you know, back in the day, not even back in the day, several years ago, not even, 4 or 5 years ago, I started a company called CrowdVest. It was one of the first equity crowdfunding companies after the Jobs Act. The last part of Jobs Act was launching Regulation A, then Regulation CF, allowing average people to invest in private companies. I was one of the first companies to start a platform for that. I then started a broker-dealer called CrowdVest Securities. I've since sold both, but I'm really tied into the industry, and I've been looking to do this product for a long time. So I'm so excited to launch this private investing product for the average person. This is for Wall Street. This is not for Wall Street. This is for Main Street. This is for the average person to invest. And a lot of them, you can invest as little as a couple $100 into it. So it's not like you need all this money to invest in it. So yeah, I can't wait to share this with you. So next Tuesday night, we're going to be doing a special video, sitting down, Jessica Naziri and I sitting down in California. Big blockbuster deal we're talking about. So I look forward to everybody joining that. And again, you can go to investorplace.com/moneywire. You have all of our information on there. I'm going to put a link in here too for those of you that are interested in investment opportunities. Only $99 a year. You get access to all of our portfolios, monthly newsletter. You're getting a newsletter that comes out Tuesday with 2 new stocks at least in it. But again, every stock's new to you if you join now, so you just get everything. So and you get monthly updates. I can't wait to get that out. I'll be working on that issue all weekend for you to get out. But I'm going to keep today's short because we had one yesterday. But again, let's just wrap up here. Market's holding on really strong after 2 big days. You know, considering right now the S&P is actually up a tick after that. I mean, that shows us something, folks. So that's number one. Number two, jobs number was great. We're coming back. We still have a long ways to go, don't get me wrong. But after that, what we just had, government shutting us down, trust me, we have a long way to go, but we're getting there, man. We can't just get there overnight. Let's think positive. We're getting there. Earnings so far this quarter have been fantastic. Hyper growth trends are really working out for us. Everything from housing to online, the gig economy, you name it. Cannabis stocks are rocking and rolling now. Man, oh man, there's a lot of good stuff going out there. Bitcoin hitting the best level since January 2018. There's money to be made in this market. So don't let the naysayers put you down. Get away from that damn negativity. Things are good, man. Let's come together. Let's do this. You know, we may be the minority that's being positive, that's getting through this and looking at the sun shining through the clouds. And, you know, along the way, not only are we going to have a good time, we'll live a better life because we're going to smile and be happy, we're going to make a lot of damn money along the way. And that's what's freaking awesome about what we do. We're going to make a lot of money and then have fun along the way. All right. Go out there and have a wonderful weekend. Be safe. Be happy. Give someone a hug. Enjoy the weather if you get out there, if you got some nice weather in your area. But again, thank you so much for watching. Thank you so much for being subscribers. Check us out, investorplace.com/moneywire. Like, subscribe, all the good stuff. And I'll put a link in if you're interested. Join the family, join Investment Opportunities today. We love to help you out and join a journey of financial independence with us. All right. Have a wonderful weekend. Thank you so much. I'm Matt McCall, and that's been your Moneyline.
Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.